Good Sunday evening. Good Sunday evening. We're live. We're here. Sunday evening. Checking out what there is coming up in the market next week. We're here. Good Sunday evening. Hello, everybody. Hello, hello. Hello, hello, hello. Y'all come on in, come on in, come on in. Let's see what there is to see. Let's see what there is to see. Coming up next week. Y'all know we got some stuff, some money we need to make, some things we need to do. Let's talk about what happened this week, talk about what's coming up next week. Let's talk about it. Talk about it. Talk about it. Hey, Ward, how are you? Oh, hey, hey. Hey, hey. Wait and let all the platforms tell the people that we're here. Tell me how your trading week went. Tell me how your trading week went. How did it go? Did you make any money? Did you lose any money? Was it profitable? Was it not so profitable? What's the deal? Talk to me. Talk to me. Everybody who's listening, talk to me about your trading week in your comments. Talk to me in the comments. What did you make? Did you lose? Did it go well? Did it not go so well? Is there some stuff you know you could have done different? Did the market take you by surprise? Surprise, surprise, surprise. Huh? 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 How did it go? How did it go? All righty. Well, let's get started on this run. Jermaine said, good evening, everyone. Hey, I was asking, how did everybody's trading week go? How did things go? Was it profitable? Not so much. Did we run into some headwinds? Were we the headwind? Because many times I found that the problem is us. It's not necessarily the market. It be us. We're our own problem. The enemy is the issue. Definitely the enemy is the issue. Okay, I want to go look while we go. Let's go ahead and get started. I'll talk about SPX and how it did its thing last week, right? This is SPX. We've got I'm on the daily chart, so we can show how it did on the daily chart. Let me clone that. Yep. On the daily chart, how'd it go? Last week's high. Now it went up. We went to an all-time high last week. Oh my, all-time high last week. This is the weekly high. It went up as high as the high was, what's that, 66.99. Did it? I feel like it went. Is that as high as it went? Why did I feel like it went higher than that? 66.90. Maybe I felt like it was at past 6,700, but it never did. 66.99 and some change. It never did bump across 6,700. It went as high and pulled back. Said I can't go up there just yet. And there was that. This was Monday. Monday, it tried it. Tuesday, it went across, tried it again, basically, no luck, and it basically fell off from Tuesday. And I thought Tuesday it was going to go on across, but it did not. Pull back Tuesday, Wednesday. Thursday had a massive gap down on Thursday. And then Friday, it went, we gapped up. Price came down to fill the gap that was left from there and then gapped up. You all remember that last week I put this buyer's gap on our chart from last Wednesday. From last Wednesday to Thursday, there was a gap that was left behind, and I put this gray gap on our chart. I drew that on here for us and left it there because we had a gap that was left behind. And then this week, what happened was the market on, looks like Thursday, the market on Thursday went down right into that gap. It gapped down basically right into the middle of that gap. Price action was enough to fill that gap. And then it filled it. The next day we had a gap up. Price did pull back into the gap a little bit again. And then it ran up the rest of the day. So the gap that was, there was a gap that would have been, where's my little thingy now? I moved it around when I was doing my video earlier today. The price that was, because this gap down here, maybe I'll change the color so you all can see what I'm talking about. This little fill area here, the darker gray now. That darker gray was left between Wednesday to Thursday's gap, what was left behind from that daily gap. But Friday came along and, nope, that's not you. Friday came along and filled. Let me grab this because part of the price action here did, okay, no, there. Part of the price action from Thursday filled part of the gap that was left from the gap down. But then this part, the darker gray is what was left. And then Friday's price action filled that gap squarely. It gapped up here and then came back down to fill the gap that was left from the gap up, and then ran the rest of the day on to fill the gap that was created between Wednesday and Thursday, considering, calling that gap full. Hey, Tanya, gap full. And this gap down here is full too. I'm going to leave it on my chart because I know we'll talk about it tonight at our charting and training session when we get into our membership call. So I'm going to leave it on here, but these two gaps have been filled. Just know, and the gaps of SPX don't always feel this quick, but SPX doesn't leave its gaps behind forever. SPX will go back, and SPX is like a no man left behind. It will go back and get its gaps. All right. So that's what happened last week. Again, we went up to an all-time high, almost 6,700, literally 66.99, 50, and went down as low as 65.69 last week. Massive weekly candle. I mean, if you look at our weekly candle from last week, now what you see here is the wick on this candle is humongous. So from top to bottom, high to low, or low to high, the low here was 65.69. The high is 66.99. So 150 points, almost 130 points is what it was. That's a pretty big amount for a round trip, and then for it to close really looking like a doji. The open and the close here are between 16 points, 11 points. No, the open was 66.54 and it closed at 66.43. So the open and close here is 11 points. For it to have gone 130 points top to bottom, but then close within 11 points, basically comes down to the market being indecisive on this price of SPX. Basically, like, are we going up some more? We going down some more? Right. We close right in the middle. This would be a 3 candle. Oh, actually, it's a 2. I thought it was a 3. This bottom here is not lower than this bottom. So it's a 2 candle, a 2 up, but it did not close up there. So if we look at, what are those things called? Like, I won't call them setups, like combos or sell zones, buy zones, whatever resistance areas, whatever phrase you want to give it. Basically, we got an up and an over. This looks like it could potentially, actually, though, it's a 2 up. It could go up, over, and up some more, or it could go up, over, and back down. This, because this is an indecision looking candle, even though it's a 2 candle, it could bring us back down, and it could go on up some more. It remains to be seen. Remains to be seen. All right. Let's talk about what is Well, before we go to the what is coming up, let's look at what else happened last week. Let's look at what else happened last week. Well, we had our trades list, right? We had a pretty good sized trades list last week. Um, Apple, Affirm, Amazon, Google, Hims, McDonald's was on both lists. Merck was on both lists. Microsoft, Procter and Gamble was on both lists. Of these 12 trades, 8 of them were profitable. 8 of them, if you just entered them and didn't touch them at all, you would have collected max profit. Affirm and Amazon were both totally breached. Amazon, I was in Amazon. I wasn't in Affirm. I was in Amazon, and the Amazon trade earlier in the week started to maybe like Wednesday started showing signs of reversal, and I looked away from. By the time I looked again on Friday, I was focusing on the other things we're trading, and came back Friday like, oh well, this is gone. So Amazon is showing neutral, and you'll see on our trades list for this week that Amazon is showing neutral, that it's on both lists. It's on the put credit spread and call credit spread right now. Google showed up. It only breached by just a little bit. It expired like at 247.18 or something like that. It just a bit. It breached into Google just a bit. So depending on what you would have taken in for profits for Google, you still would have ended up profitable, because a 2.5 spread, I encourage my students to not take anything less than 10%. And it's a 2.5 spread. So you would have taken no less than $25 in on this trade, and it breached less than 25 cents. So you would have, you still would have ended up profitable. And if you were watching, which most people do, you would have closed your trade anyway before it's starting to look kind of dancy at the end. And then Merck, was like 78.50. So that would have been a partial loss on the Merck trade, because it expired like 78.50. But 75% win rate, we'll take it. All the ones that we were in, I was in Amazon, I was in Google, but I close my trades when they get to be 70 or 80% profitable. I don't wait till expiration with my credit spreads. I close them before they get to expiration. So I had Amazon, I had Google, I had Microsoft, I also had IWM, and I had SPY. And those all of them, except for the Amazon, expired profitable. All right. The Amazon did not expire profitable. It expired breached. Max loss is what it expired, which is never a good thing, because you take in your profits in the 25, 50, 7, you kind of add them up. But when you get a max loss of 250, that'll take out a whole lot of profits in a short period of time. Tanya said, I was in IWM. Yeah, our IWM trade was fine. And I actually traded IWM a few times. I would go out or go 1 DTE. I'm working on a 1 DTE strategy, Tanya. I think I about got it. I really about got it. I might have to start telling you about it so you can do the 1 DTE. I might mention it tonight on our call. Remind me, because I think it's real close to ready, if not ready. Okay. So we'll talk about it. Even if you working in your sim, then you can still be practicing it and be getting yourself comfortable and ready with it. Okay. So that's our trades list for last week. 75% win rate is what we did there. That was a positive, except for that Amazon trade. That I wasn't fond of that idea, because it wipes out profits from, but it reminded me that I have to utilize the same criteria for my weeklies that I do for my 0 DTEs. My 0 DTE close criteria is, if my sell leg gets breached, I close the trade. I need to do the same thing with my weeklies, that if my sell leg gets breached on my weeklies, I also will close the trade and not wait until just the time expires, but I will close the trade as a risk management, portfolio management kind of thing. So I'll start doing that. I'll make sure I do that. Okay. Cause that's really, I've always had that for my 0 DTEs. I didn't follow it as closely for my weeklies, but we'll fix that. That's a small problem to fix. Okay. Looks like on Yahoo Finance, Wall Street says the high stock valuations could represent a new normal. Strategists say lofty stock valuations could be here to stay in an AI-fueled market with strong earnings momentum. Trump to meet top Democrats with both sides down. Too many lives and people's livelihoods are affected by that. Commentary, the stock market valuation chart we can't have until 2035. Hong Kong criticizes biased U.S. investment climate report. Toyota workers in Brazil approve temporary layoff plan. Time is running out to cash in on the EV tax credit. How Walmart plans to prepare its workforce for an AI-driven future. That's probably an interesting read. How does Walmart plan to do that? Bond traders say rally hinges on jobs data as at risk from shutdown. Yeah, that bond, because if the government goes on shutdown, that jobs data that's supposed to be the real read this time is going to not be available, right? If the government shuts down, we're not going to get that jobs data that we waiting on because we supposedly have been given inaccurate data up to this point. That's kind of what was told to us, that the data has not been accurate, or it wasn't accurate the last time, and this time it's supposed to be accurate because the people who did it before got fired, and now the new person really went and did the true thing, and Anyway, it's interesting to see. We'll see how that all shakes out, right? How does that all shake out? Shake. Hey, shake the data. Oh, shake the data. GOP leaders say Obamacare tax credit fight can wait until after government shutdown is averted. Absolutely. How about we figure out how to keep our government running? How about we do that? Trump to meet with congressional leaders ahead of the shutdown deadline. Jeffrey slams Trump for attending Ryder Cup golf event as shutdown looms. I'm leaving it. Trump threatens mass firing of the federal workers if the shutdown isn't averted. Okay, the person who's in control of that is you, sir. Make sure that we figure it all out. Okay. I'm gonna go on. Now, crypto has dropped a big bit. Crypto with the Bitcoin is down at 110,000. Had a pretty big sell-off. I think weren't we up in the 120s there not long ago? Ethereum 4053, Solana 206, Dogecoin 0.23, XRP 2.84. Now trading crypto, you can trade crypto all the time. It don't stop. And you know what though? I personally cannot and will not at this point go into trading other markets yet. I say that now because I have enough screen time. And if I were to be trading something that ran around the clock, Lord. Hey, Antonia, if I had something that I traded more of, because people are into futures, and boy, if I was in futures and it could go all into the night and into the mornings, when would you sleep? When would I sleep? Yeah, so I'm not even gonna do that to myself because I already know me. I already know how I would be. So I'm just going to know me and use wisdom. That's what I'm gonna do. Okay, let's look at the meetings coming up for this week. On Monday, we've got 7:30, FOMC member Waller is speaking, 8 o'clock Hammock, 10 o'clock pending home sales, 1:30 Musalem and Williams will both speak, and at 6 o'clock, FOMC member Bostic will speak. That's all on Monday, just the orange folder of pending home sales. Tuesday, we've got some more FOMC people speaking. We also have HPI, housing pricing index is month over month is at 9 o'clock. And year over year, also 9 o'clock. Chicago PMI 945. 10 o'clock, red folder, ding, ding, ding. JOLTS job openings on Tuesday at 10 o'clock. CB consumer confidence. Goolsby at 1:30 is speaking. 4:30 and 7 o'clock. There's some other stuff happening after the market closes. Wednesday, all day, we got OPEC meetings. 8:15, non-farm employment. Change, 9:45, final manufacturing PMI, 10 o'clock PMI. So another red folder on Wednesday. Red folder Tuesday at 10, red folder Wednesday at 10, okay? Construction spending, total vehicle sales, crude oil inventories, which should definitely be orange, if not red. Thursday, challenger job cuts, unemployment claims, 8:30, red folder. This is before the market opens, but that always has some effect. 10 o'clock, factory orders, 10:30, Logan will speak, and natural gas storage. Friday, FOMC member Williams will speak at 6 o'clock. Must be something going on that they're speaking at some different place, that so many of them are speaking all week. And then I think there is that but when they have the meeting announcement, they have to wait like a window of 2 weeks before they can really start speaking or something like that in places. So now we're out of the 2-week windows, with maybe why we're getting them speaking in places. Average hourly earnings month over month is Friday morning at 8:30. This is our red folders. Unemployment, non-farm employment. That's Friday morning, red folder. 9:45, final services, PMI, 10 o'clock, ISM. So Tuesday, Wednesday, Friday, all 10 o'clock red folders, ding, ding, ding. And then 1:40 on Friday, FOMC member Jefferson will speak. All right, that is what's coming up this week as far as data drops are going. Okay. I have our earnings. Where'd our earnings go? Here we go. Earnings coming up for this week. We're ending. This is the last week of September. So September is coming to a close after this. Actually, Friday's expiration is 10/3. So we're into October. But this is the last few days of September. We were ending out, finishing up Q3's earnings. We got Carnival doing Monday. Carnival, the cruise line people, are doing their earnings Monday before open. Progress, Jeffries, Vail, the resorts, and Inventiva. Yes, Inventiva is Monday after close. Lamb Weston, Paychecks, and Unfee or Unfee are Tuesday before open. Nike is Tuesday after the close. Why Nike end up out here all by themselves? Wednesday, Acuity Brands, Conagra, Resolve, RPM, Nova Gold, and Cal-Maine Foods, Calm. And then nothing Wednesday after close, and Angio Dynamics is Thursday. Nothing Thursday after close, and nothing Friday. And then there'll probably be a little bit of a break, and then they'll all ramp back up. The banks will lead us, and then we'll ramp back up into earnings for the fourth quarter. Hey, Julie, and hey, Denise. We will ramp right back up into earnings again for the fourth quarter. All right. All righty. Let's go look at what do we have on our trades. Now we have a pretty good size trades list again for this week. Pretty good size trades list. And what I would suggest you do if you want to trade off the list. Now I get this list from Peakbot. I'm a influencer for Peakbot, and I use them to select my trades. You look at the trend. I don't necessarily always look at their strikes, but they do provide strikes. I don't not use them. I just don't go there just for them, because I know how to look at strikes too. But you can go and check the strikes for sure. But I use Peakbot. We've got Apple, Adobe, AMD, ARM, Amazon, back on the list, told you, Baba, Delta Airlines, Google, NVIDIA, Upstart, and Walmart, all on the bullish side. The bearish side, we've got Amazon, Adobe, ARM, Disney, UPS, Upstart, and XSP. All of those are on the list for this coming week. All of them have October 3rd expirations. Even XSP, which is a 1 DTE or expires 0 DTE, expires every day. It is still here for a weekly expiration. So definitely keep your eye on that if you're interested. You see the star, some of them are starred and they're on both lists. That's what that means. The star next to them means they're on both lists. Pick 3 or 4 of these, pick some of them, decide. If you're not going to let Peakbot do the automated for you, which I do, I let them automate and enter for me. But if you're not going to, then just pick 3 or 4 of these and enter them for yourself on Mondays or on Fridays. I actually like Fridays, because then when you do it on Friday, the theta gets to decay over the weekend. It starts the process of decaying, the time decay. That works for me. Okay. And then Monday or Tuesday, I usually can close Wednesday, I usually can close the trades I'm in. And if I want something else, I can go back in again if I want Wednesday or something like that. That's the way I do it. But pick you 2 or 3 that you like, 4 or 5, whatever amount you want to put on credit spreads, and go ahead and get in some of these. If you're not sure how to do credit spreads, I have a whole credit spreads masterclass at my website. I have a whole credit spreads masterclass. You can go to grab educator. Let me see if I can get it spelled right. You can go ahead and grab over at educatortotrader.com. That's one of our premier strategies. It's one of the main strategies that we trade is credit spreads. We use it for the weekly. We use it for our 0 DTEs. We do credit spreads on all the stuff. So if you really want to trade with us, if you want to trade with me, we do credit spreads. We also do cash secure puts and cover calls, but primarily we do credit spreads. All right. We're learning all the things though over in E2T University. We're learning all the things. Speaking of it, I'm just going to go here and then I'm going to go to the chart. But E2T University is running. We had our first session last Monday. Oh, it was great. It went off so well, went off without a hitch. We had a bunch of people who were there and ready to learn. This week, we're going to go into, we're going to start with the chart. We're going in there with the charts this week. That's what we're going with this week is our charts. We're going to start with the basics, what are candlesticks. We're going to grow it from there. We're going to start with basics of charting, looking at support, resistance, gaps. We're going to look at indicators, moving averages, fair value gaps, VWAP, the strat. We're going to pull all the pieces and we're going to really, really, really lean into how do you analyze a stock based on that chart. And that can be used whether you're a buyer or a seller. And I know there are more than enough people who don't know how to analyze their stocks or their trades on that chart. There's far too many of us who don't know how. All right, so you can still join us at E2T University. We're meeting on Monday nights at 7 and then doing stuff through the week. We have a whole academic community that you're going to be with, and you can come on in and learn I want you all to be confident in what's going on. That's really what I want for you. I want you to be confident when you're selecting strikes and when you're picking when to enter and when to exit. And the way you get more confident about that is you start to be able to look at what's happening in that chart. And that'll tell you now is the time to enter. Or you look at stuff and you go, this is not going to go my way. And so I need to exit instead of, hoping. We do not trade on hopium. We do not trade based on hopium. We trade based on what we see. And y'all hear me say all the time, trade what you see. And if you don't know what I mean when I say that, you need to be in E2T University. The period with a T at the end, period. Okay. Well, let's move on. E2T University, you can go to educatortotrader.com and get yourself signed up there and be ready for tomorrow night at 7. Don't play with yourself. Basically, don't play yourself. If you put money on the line and you're not really sure how to do it, I'm telling you, you just asking for the market to take it. Because the market, we talked about the other day, the market has no respect of person. It will take whoever money will give it, and it will pay whoever wins the trade or whoever deserves the money. The market does not care. It will give the money to who should get it, and it will take the money to whoever is handing it over, take it from whoever is handing it over. The market doesn't care. It is emotionless. It takes capital and it gives capital to whosoever, and it takes it from whosoever. All right. You don't want to be in the giving category too long. I know for me, I was in that category way too long. I'm like, okay, something right here got to give. I am not going to keep giving my money to the market. I'm not doing it. I'm going to need to figure out how I'm going to do something different. And I went and got me some more education. Okay. I said, I'm going to go figure out how I can get more confident about what's happening in my trading. And I went and got some more education. Yes, I did. Sure did. Got me a mentor, got me an educator, and said, okay, I need to sit under some authority and learn some more. And I learned a lot and started putting those things to use. And now I can transfer that information to others because I've learned it and put it in practice and I utilize it. Okay. I didn't just learn it last week either, by the way. He's like, oh yeah, you learned it last week. Now you want to teach us. No. And even if I did, I didn't. But even if I did, that still means I would know more than you know if you don't know. Even if I did learn it last week, I would still know it now and you don't. So it would still be, I would still be ahead. So come on. Come on. That's not what happened. But I'm saying if it did, it would still be, we'd still both be moving ahead, right? If I'm one step ahead, that means I'm still the leader, right? Come on, come on. Let's get what we need. Let's get what we need. We don't keep, you don't want to throw your money to the market. At least get something in return for your money, because the market ain't give you nothing for it but pain and heartache. Ask me how I know. Ask me how I know. I've had the pain, I've had the heartache, I've had the sleepless nights, I've had those things. I've had them, I've had them. And it wasn't all that long ago that I've suffered loss. I've suffered loss. Hey, I wanted to share with y'all the video that before I go to the chart. I wanted to share with y'all the video that I put out. I put out another video this week, another trade recap video. Made another little bit over $2,000, $2,100 this week with my credit spreads and SPX, and did a trade recap video. I actually did put the video out like not just before this, but soon before this. It wasn't a lot before this, and I wanted to I recorded the whole freaking video and then got ready to go back and listen to it to make sure it was fine, and realized it didn't have any sound. And when I went to go, I had noticed that microphone button wasn't on, but I noticed it in passing, and then was like, shucky ducky. So anyway, I had to go and re-record the video again. And after I re-recorded it, I had to post it again. So I had to do all the steps. So here's the video. I'm going to give you the link so that if you're on my YouTube channel, you should be able, if you're on YouTube, you should be able to see this without a problem. But if you're coming to watch me, if you're watching me through Facebook or through Twitter or something like that, you're going to need the link. So I'll give you the link, and then you can, where are we? And then you can watch the video. This is a recap video. I talk about the indicators. Which indicators do I use? I talk about the trades that I took for the week. Talk about the profits and suchy. All right. So go take a look at that video. Take a look at it and see what you think. Put some comments send me some comments, send me some, put some thumbs up in all the world, let the world know that you've seen it, right? Let the world know that you've seen it, and put some comments in there and say, this video's great. This video's not so great. Whatever it is you want to say. That, I know as soon as I say this, I might have a bunch, but I don't really have a whole bunch of trolls that come into my videos. Thank the Lord. The Lord watches out for me. He's a kid. My angels are gates, and they guard all the people from coming and acting stupid on my page, which is fine. I know as I continue to put more videos up, I probably will have more people show up. But at this point, I don't have a lot of that, which I'm grateful. I'm grateful. All right, let's go look at these charts. So I keep saying I'm going to go look at the chart, and then I don't. But let's go look at the chart. Okay. This is SPY. Going to look at SPY, SPY. SPY also went to its all-time high last week. So let's see what did it do. Went up as high as 667.34 is as high as it went last week. It went there and did just like SPX and pulled back off of there, but that was the high. Let me see. ATH is where it went to. Yep. If we're looking for some support and resistance, there is some support on the daily chart at 657. Right. Let's go see if I change it to a line chart. We see some lines in here. What is that indicator that is showing that line in the middle? In the middle of it. In the middle of it. It's that one. Oh, is it? No, it's not that one. That is not the one. There it is, the VWAP. VWAP. No, this is all momentum. This is all. I have to go to a smaller time frame to see some stoppages Let's see if we change to an hourly time frame, if we see anything that shows us. Yep, there's a little bit right here in the 661 area. There's a little bit in here, some more support, because that on the daily chart, that was all momentum. Okay. Let me go back to my candlesticks. Now, when I chart with my folks, I do a lot more in-depth charting. I don't do it on this call because charting, can take a little more involvement. When I definitely get a lot more involved when I'm charting with my folks in an educational environment, and this ain't that. So we don't get all that close, get all that involved when we're just on a YouTube video, unless I'm YouTubing, which is not right now. I'm live. 660 is another support area, right? So basically this, oh no, come on. There we go. SPY did much like SPX did. This was Monday. We had a green day. Tuesday, Wednesday, pulled back after went to all-time highs. Thursday had a gap down. Friday closed that gap just like it did on SPX. Okay. And it's basically this is a bullish reversal formation. It definitely could continue back upwards. Looking, this is a 2 up, could go back upwards, maybe to go and attempt the all-time high again. We're at a bullish reversal, a 2-2 reversal at this point, going back up. Time frame continuity shows us upwards on the day, which was Friday, and we're still up on the month. We're still green on the month, so we could continue going upwards. All right. I don't see any gaps at this point that haven't been filled. So we'll go on from there, except for this one down here. SPY has a gap down. Okay. SPY has this gap down here from 650 to 651 and some change that still remains. That's a daily gap. If I was to move to some lower time frames, I probably could find a couple of more, but I'm staying on the daily time frame at this point. There's a little bitty just below that, but we're not getting that deep into this chart. I'm not here to get that in depth in the chart, but gaps is something you should look at because gaps will provide support and resistance. Gaps will definitely provide some support and resistance. So it looks like this gap here that was marked, this gap here, oh, come on. Yep, this gap was from 589 all the way up to 592. It was created from the 17th to the 18th. That gap got filled on Thursday. This is triple Q we're looking at. That gap got filled on Thursday by Thursday's price action. So it can be taken off the chart at this point. Let's look up here at the all-time high, even for triple Q. 602 and some change is the all-time high. We're still in bullish territory, overall bullish. The month is bullish. The day, of course, was Friday, is bullish. The week was red. That's all over. All of that the day and the week will start over tomorrow, but the month is we're still green on the month. 2-2 bullish reversal. Let you know that there is some more room to go back and try the all-time high again. All right. IWM is one I really like to trade because IWM is our small cap. SPY and triple Q to me is just like trading SPX. They're very similar, nothing new. You see one of those, they're probably moving mostly the same, but IWM does not move like SPY and triple Q. It's the small cap. It's going to be doing its own thing. And so to me, it's like it's trading somebody else. So I like to trade IWM. So I do. I like trading them, so I do. And 247.18, I believe, is its all-time high. 247.18 definitely went up as high as there on Tuesday and pulled back just like SPY and Triple Q did. It did that too. The gap that was left from Wednesday to Thursday of last week, the 17th, got filled on Thursday and Friday. That gap got filled, so it can be taken off the chart because it is no longer an accurate gap. Okay. Support. Let's see, we got another support down here at the 235 area. This support here in the 238.50 area. See, when I put supports for me are like a zone. They're not just a hard place. Support for me lets you know that in this area, as you see me moving my line, in this area, there is support. You see, there's all these three things, these three candles over here were kind of doji, for sure doji-ish. And then here the price came down and then it dropped to here and then moved back up. So in this area, there is support. I leave it as a zone. I don't put the whole thing because that would make my chart be too busy. My chart be busy enough. So I don't really mark the entire zone because my chart is already noisy enough. So I know when I put these lines on that my lines are areas. I know that these are not like hard concrete stops. These are like trampoline. The trampoline kind of goes in and bounces off or goes up and bounces back. I know that. So I keep that in mind when I'm trading, that the lines I have put on are areas. They're not hard stops. Okay, they're areas. Alrighty. So that is IWM, which also looks like it's got some it's a 2-up. It's got a whole bullish reversal as well. I don't see why we don't have our little bullish reversal thing here, but we are green on the month, green up the day and the week, don't matter because they're going to start over tomorrow, but definitely still green on the month. You can see that with the moving averages as well. All righty. Okay. I think that's cool. We in trading SPX and trading XSP, we do all that in the membership that I've mentioned a couple of times, the option seller zone membership. We trade those each day. We have a charting call that's going to be in the next 20 minutes. We do it every Sunday where I do charting and training. That's what we do there. That's separate from E2T University. The membership, we're just really focusing on one stop, even though we do some weeklies and some other stuff in there. Our focus really is just the SPX. The other things are just me adding things in there. It's not because that's what the membership entails or includes. But we trade SPX and XSP are 0 DTE, 1 DTE, sometimes 5 DTE. That SPX is our focus there completely. SPX and XSP is our focus. All right. You can come on over, join us in the membership. We got folks pulling in them profits. I made a post the other day about I have a few people who are pulling in $1,000 a day, just rinse and repeating the same collateral. Trading SPX every day, open, close, a few trades a couple times a day, and not even trading like all day. I mean, I have one guy who trades in the morning. He might trade an hour and some change, and he's done, and he's off to do the job that pays him. All right. So it ain't even requiring all day. And I do have some people who have the availability to watch the charts during the day, and they do that. And they're making $200 to $300 a day. Could you use an extra $300 a day? An extra $100 a day. I talked about $25 a day is $125 a week. That's extra $500 a month. That's your car note or your gas bill or your light bill or your groceries. That's definitely going to offset a bill. That's just $25 a day. And we can make $25 a day almost doing nothing. That would be super easy to do. Okay. So there's that. Let's go on from here. I think I have covered what I wanted to cover. I'll be on tomorrow morning, 8:30. That's when I come on at 8. Well, good thing I was almost done. I was pretty much finished, but I'll be on tomorrow morning. I don't know if y'all heard that part or not. I'll be on tomorrow morning at 8:30. We'll talk about what's going on in the morning. Let's talk about how the night went, how things are going in the night, and we'll be prepped for the morning. Let's do some little pre-market talks and all those good things. All right. In the meantime, in between time, two things. Go look at the video link I sent you. I gave you a video link for my, trade recap. Go if you're going to join E2T University. This is the time, so you'll be ready to join us tomorrow. If you're joining the membership, go ahead and get registered and sign up for that, so you can be on our charting call that's going to start in about 15 minutes. All right. Besides that, I'll see y'all in the morning. I want you to stay green and I want you to get this money. All right. I'll see you all in the market. Bye.